Good morning, everyone, and welcome to Trading with OC. Finally back in Merida, ready to set up and ready to start rock and rolling. Today, it's a very warm day for me. I'm just so hot right now that I'm melting. So let's get started with chapter number 4. Finally picking it up where we left out at number 4. Final chapter 4 on Friday. Finally, I got my Wavelink XLR back in here. It is up and running. Maybe the music is a little bit too loud. Let's fix that. Perfect. I think that's much better. Perfect. I had to get another Wave XLR to compensate. Thankfully, I did had 2 of those. One for traveling and the other one right here on my main studio. So, well, no wasting time. Basically, just came here, swap it up, and throw the other one to the trash, and let's get it rolling. So let me get started with you guys, because guys, you are amazing. Key DGT, what's up? First one to comment. Jesse, what is up? Alexandra G, what's up? Mud Queen, welcome. Jay Violet, hey, how are you? Welcome, great to have you here. Who we also had in here in the chat? Let's see, Jay Violet, Piper Carey, of course, that was me. And Harp, what is up, Harp? Welcome. Orange juice and coffee. Man, I run out of orange juice. By the way, guys, if you have not tried it, do a 1 espresso coffee with a shot or with up to 3 shots of orange juice. You will not regret it. It's weird, a little weird. I'm not gonna lie, but it actually tastes very good. All right, who else we got here? Week Wife, welcome, Week Wife. Great to have you around. Great to have you here. Who else we have in the chat? Let's see. Who am I missing? I think that's all that we are here for. But let's get it rolling today. We're going to be taking a look at indicators, all right? I know 3.1, chapter 3.1, we did saw a couple of indicators. We saw moving average, support and resistances, so on and so forth. And today I want to talk about a little bit of my specialized indicators, the ones that I do use to trading day on day, my settings, and also a quick reminder, if you don't have them and you want them, we offer you a 40% discount first membership or first time you join. Link in the description. Also, bluffing is giving you a chance to trade without that much of a risk, because they're giving you a bonus. The more that you add to that, the greater the bonus that you can claim. I think it is an up to $300. So do not let that go. Maybe that could be your opportunity. Maybe you can trade with that bonus and then take the rest to your home or back to your pocket. We'll see. Remember, trading, it is waiting. Just like oh, who do we have? Anyone else here? Oh, great, got it. So just like the other usually says, Alex or Crypto. So let's get started, and I might still have to do some adjustment to my charts, so we'll see. Let's move on here. Oh yeah, I knew it. So let me fix my chart here really quick before we get started. There we go. Perfect. All right, we got it going here. Guys, let me know in the side chat if the music is too loud. If it's too loud, maybe I can just turn it down a little bit. There we go. I think that might be much better. So let's get started with where we stayed at. So hi JB, good evening, says Alexander. We trade with Piper Academy on bluffing. Yeah, absolutely. There we go. Thank you so much for that, Alexandra. Right there, up there on the comments. So we stayed at a couple of indicators last time, right? Also, we did some analysis in here with a possible broadening wedge, or also if you were taking a look at the Piper Academy, we also were looking at just an up ranging zone. Seems like that broadening wedge actually was a much better fit, and this is where we left out, right? We had a possible bullish flag in here. We break to the downside. Remember when we're talking about the patterns, with the gold in the pattern, it is in the lines of the limit, right? So we can trade the lines of the limit, or we can trade the breakouts. So at this point, we break all the way down here. Remember, we also have couple of support and resistance. It's not about the breakout, right? It's about the retest, and off we go. At this point, we are also rejecting back from that support in that line right there, right? So now, what's going to happen with Bitcoin? Well, let's get to add our indicators in here. So first of all, we have our dynamic reactor. Also, we have our EMAs, right? We are below them. We're still bearish. Let's take a look at our oscillators, right? Our oscillator right here. Oh, look at that. It actually played out very nicely, right? We were tipping off the bearishness, right? And losing strength on the bearish setup. So what happens when we lose strength on the bearish trend? We bounce up. Not a change of trend, but just a bullish bounce. All right, so what do we have there? Basically, that bullish bounce played out fantastically. Let's take a look at our oscillator from Chart Prime. It is basically a flip of the ribbon right there. We're heading to the zero line, and we're pushing also upwards. If you know, usually I wait for the breakout retest here, or just the breakout and then the breakout retest somewhere around those areas, and that will be our entry. Let's just take a look at what we got in here. Let me go to our setup. Let's see what else are we looking at, right? So TRX, basically, there we go. We're looking for a possible entry. There we go, moving our stop to entry, right? Taking TP number 1, and then what happens? Take us out at 0. Then remember, also we have plan number B, breakout retest, and off we go. Did we took the TRX straight for the long? No. Why? Because we're just visiting it, right? So I cannot claim a trade not called it out before. So we just see it as not taken. By the way, guys, if you want to be early in the morning with us at the Piper Academy, that's what I usually give my entries and setups for the morning, and also to take a look at those. Let's take a look at Ethereum, because in Ethereum we did get an entry call, not only here but also in the Piper Academy, right? Remember what we were waiting for, this area. How do we calculate our stop loss? Let's go for a long position. Our entry area, we look for the previous low, meaningful low, right there, and then what we do, we add our wiggle room, right? Then what happened today in the morning? I told you guys, well, we are on profits at that bounce, right? Because we did average down on that entry, and we should be taking some profits. If we just only followed this entry, don't worry, give it a little patience. It's time to start looking for, as soon as we are on profits, start moving our stop loss to entry, or as soon as we can. Why? Because we're getting very close to what we call a rejection zone. So just be aware that if we don't move by within 8 hours to the upside, I think we're gonna be just going downwards. But still, it's looking that it's promising so far. Why? Because we have triple bullish divergence, peak seeker, and also we're losing strength on a bearish trend right there. Let's take a look and see what our indicator tells us right here, our RSI prime, right? Where was our entry? Well, tiny candle right there, entry 1, tiny candle, second chance, tiny candle, third chance right there. And basically right now, what we want to see, it is a continuation to the upside. Remember, we were looking at this pattern here. So the next thing that is coming up, or what we should be looking for, will be something like that, right? Just like in here, you see that? So basically something like that. Look for something a little bit more stretched to the downside, to the right side, right? So that's what we got here. Let's go and dive in the indicators that I use. Let's add them, and let me show you a couple of tricks that I add to keep them on my side. So basically make them work the best that I can. All right, let's get started with Bitcoin. Let me go with another cleaner Bitcoin that I'm not be too shy to clean this up. There we go, that's it. And also I'm gonna be turning off my EMAs. All right, I'm gonna be giving you a setup of MA, so just a moving average, right? A simple moving average, SMA, right? Or MA. Let's just add it here, and let me tell you something. We can pair MAs, right? With the dynamic reactor, but it will not last more than, depending on what time frame you are, you will have to recalculate. Don't worry, in the class I'm going to be giving you a couple of updates on those MAs, but let's do it on daily in here just so we have a long-lasting MA. All right, and right here I want to go with something like, I don't know, a 150. Let's get started right there. As you can see, it's a little bit offset. Let's go lower, 120. And it's getting closer, right? As you can see, they do diverge, right? They do diverge one to another. But so far, they stick together very, very closely, right? I think we can do better on that MA, right? Let's do 110. And that seems to be close enough. Let me just do 100, but I don't think that's gonna match too much. Yeah, not much. And also we're having too differential or too much disparity between those two. So let's go with 110 MA, simple moving average, right? That for us is gonna be so far our setup for dynamic reactor. If you don't have dynamic reactor, we can improve this with a smoothing factor. Let's go with a smoothing factor of 30 right here. Let's just click setup right here. Let's just click away. Let's wait for a little bit. And seems like, oh, sorry, my bad, SMA. And let's do a little bit more in here. Let's do 60. All right, seems like still too far away. Let's do something less than that. Let's do 20. I think that will be a good area. So what are we going to be using this for? This is going to be like the thickness of our oscillator. All right. So this is not going to be a one-to-one match. All right. So just bear in mind why, because the oscillator from Chart Prime, sorry, for the dynamic reactor from Chart Prime, it has much more mathematics calculations within it, and also it diverges from just a simple moving average, right? As the time goes by, you'll see that they start diverging a little bit more, but don't worry, we're gonna be working out on those as we go, as the time goes off, right? So let's click OK. And at this point, let's go to something like the 4 hours. Let's see if we can find that parity. Hey, week 589, what's up, brother? Welcome. Great to have you here, brother. All right, so as you can see, they pair very similarly. They do diverge, right? So we need to take that into consideration. It's not a one-to-one, but they played out very nicely. All right, this is in case that you don't have the dynamic reactor. You can follow along with a simple to use setup, right? By the way, if you ask me, I rather see the 55 EMA, right, and then use it as a dynamic reactor, despite they are very far away one to each other. But I know I'm using a well-known EMA, right, to predict changes on the trend. Nonetheless, I rather use a dynamic reactor in here because it is much more precise, and I have added, or I have calculated for my trading style. All right, remember that when you are editing your market oracle, or your trend, your trendy, right, you also want it to pair with your dynamic reactor. Basically for me it's 43. We'll see that in a second. But also that comes into play if you don't like my settings, feel free to change them, right? And I'm gonna be giving you a set of tools to use an SMA crossing, right? So let me just turn this off and then turn on SMAs, right? At this point, remember, this is the classical SMA, 110, right? And then a smoothing of a length of 20, right? That's everything that I've changed. Why did I have that other line? That is to give me a thickness between those two, right? Let me show you how does that look on my dynamic reactor. There we go. Look at how the thickness start closing down and start increasing, right? usually a bigger thickness, it doesn't make it for a stronger dynamic reactor. It only increases the thickness of the area where that volume is allocated. That is not exactly a one-to-one strength ratio, right? But usually when you have more volume allocation, you usually have more space to allocate that volume, right? So that's what I usually am looking for, right? The thicker there is, I rather see it bouncing from, and the thinner it is, I think that we want to have less of a strength to break through, retest, and then off we go, right? So that is basically what I have allocated to SMAs, right? To try to simulate that thickness. You see where I was aiming for my dynamic reactor, less of a thickness. Right here, the lesser thickness start happening here. The bigger thickness, I think, is in here. Well, my oscillator was somewhere, sorry, my dynamic reactor was in here. So again, it's not a one-to-one, but it works very closely. And just a little tip for you to follow along while we just use, or I use my dynamic reactor. All right, so let's move on into the next one. When you're looking to get a disparity, or when you're looking to get basically trend change, not disparity, trend change, we're going to be using our trending, right? At this point, I'm using 43. Let's get started with that one. Turn it on, right? And the first thing that we're going to be looking at, it is the color on our candles. Let me turn off for now our, there we go, dynamic reactor. There it is. Let me click OK. And we have seen this on 3.1, if I'm not mistaken, but I'm going to be giving it once again right here for you to remember. So what I want to see in here is just basically go to a time frame where I can easily identify. Let me just turn this off for this example, right? Trends. This is an uptrend, right? This is either a consolidation, slightly tilted downwards, or a range, right? I see a range, which also is a double top, right? And then I see a downtrend, right? This downtrend, by the way, if I use my trend lines, look at that. We are almost right there on breakout retest, right? So there's a slight light at the end of the tunnel here. What we need to see, it is hold it, maybe have a secondary bounce, and then taking these previous highs above these other highs, so something like that. All right, so this will basically give us a second life right here on the bullish movement on Bitcoin. But at this time, we're still bearish. All right, we are trying to make that breakout retest. We are on the retest. All right, perfect. Now that I can identify what is a range, what is a trend, well, then I want my indicator to tell me also without me having to manually do that, right? If I turn my SMA, I'm going to be looking for 3 different things, right? And let me just clear this up so you can see. I'm going to be looking for my SMAs to do this kind of movement, which usually indicates breaking back and forth, back and forth, back and forth, right? Basically not having a defined trend. And if we don't have a defined trend, what we got, we have a range. Just like in here, look at that, breaking back, forth, back and forth, back and forth, back and forth, right? So I'm ranging. The next thing I want to look for, it is that where I circled my trend, I want for it to be very, very close to that breakout retest, right? Breakout retest, off we go. Slight fake out, or better yet, breakout retest, and off we go. So as you can see, there's a little bit of a drifting zone in here where I could be saying, well, this is the confirmation for my bullish trend. Still very close, right, to what I decide or what I see as a bullish trend. Why? Because where did my range ended? Let's grab this trend line. There we go. The trend line tells you where the trend has changed, right? It's not about the breakout. It's about your retest. This is your trend breakout, right? And off we go. Therefore, look at that. This one gave us an early entry right there. So what we're looking for here, guys, it is confirmation, right? What we want to see here, it is that we have a secondary setup here that confirms what we're looking at. All right, so there we go. This is basically a setup for trends. Let me just clear this up. Perfect. Now, what do I see? I see this range. There we go. So where the trend has broken, look at that, breakout, retest. Where did I lose my trend line? I would say here, breakout, retest, right? Range, confirmation of rejection. Basically, I had my confirmation right there. So it gave me an early confirmation, right? That my trend, it's broken. Perfect. So right now I see that the SMA setup, it's playing out fantastically, right? So once again, guys, use your setup here with the SMA to get you trend breakout. For me in the 4 hours, it works great on 110 and 20 for my length. Let me give you the setups here that I see, for example, in lower time frames. Let me turn this off. Let's go to something like the 15 minutes. 15 minutes is very popular. Let's just give it a second here. Let's double click here and I can identify a couple of stuff here, right? First of all, look at the amount of volatility, right? So I cannot identify a trend in here. Well, kind of, I mean, an uprising trend, but is it a range? Is it a triangle? What the hell is this, right? I mean, we know what is it, but so far easily identifiable is not, right? This is a range. This is a trend, right? Where the trend ends, breakout retest, right? And then we have another range in here, right? So sort of a range. There we go. So we have identified 3 sections, right? We can either identify, even identify this other range. So range, uptrend, range, downtrend, range, right? Let's see if my SMA setup identified them. So there we go. Perfect. Look at that. Breakout retest. Off we go. Where we're looking for, there we go. Breakout, rejection, confirmation. Well, right at the edge, right? At the edge, right? Then what's happening here? Breakout, retest, back and forth, right? So it's playing out very, very nice. Let's see if my dynamic reactor does it. Oh, for that, I need to turn it off, of course, right? Let's just give it a second. Then there we go. Perfect. Here we go. Where do we have a change of color of my dynamic reactor? Right there. Look at that. Precisely. Right? Where do we have change of color and then breakout retest? Well, I would say it's something in here and it act almost as the SMAs, right? There we go. Here we have a very nice breakout retest. So it also cutting those change of trends. Very, very nice. All right. So we can see that we can use them very similar, right? They both are catching trends very nicely. And then let's go for something else. All right, guys, this is something that you can do maybe with Bollinger Bands, right? We're going to be seeing a substitution in the future. It's not, again, not one-to-one. But what I want to tell you guys, it is that you can start adding some certain indicators to give you the trend, right? Usually we try to get just the most simple, but also the most powerful, which is the trend reading. So when you move out of a trend, right, into another coin, you can easily identify where the trend or how the parameters are changing just in a glance, right? So for example, let's go to Kava here. And then I'm just gonna be double clicking here, maybe just making it a little low. And as you can see, it's kind of like a hard to read what is it, right? Even if I go in, if I zoom in, well, this is a range, right? And what is this? Is this just a retracement of a bigger trend? Is it a V-shaped recovery? I mean, I really need to move out a lot to actually understand it, right? And then I can see, look at that, there is a range. Sorry, there is a trend, right? And now there is a range, right? And what we got coming down, a little range, right? V-shaped recovery equals what? 70% chances of ranging. We already have defined our range here, the inner range right here, and then the outer range from here to there. So let's just mark it for clarity's sakes. There we go. Let's do the price action. Outer range, inner range, part of the outer range. So what we're going to be doing here is trying to do a hedging strategy, right? What we do, we buy the bottom, we sell the top, right? We buy the bottom, we sell the top, and then we keep one of each open just in case whenever it needs to break out, because it's going to break out sooner or later, and it could break to the upside or it could break to the downside. A range, for me, it is an unknown breakout. Although if we're in a downtrend, if we're in a bearish trend, usually that range breaks to the downside. Still, let's just treat it as unknown. That way we can be a little bit more cautious while trading the range, right? Remember, when we're hedging, we're keeping the long alive and we're keeping the short alive, right? So whatever it happens, it's gonna stop me out on one of those, right? And the other one is gonna keep profiting out of the range, right? Out of the breakout. So there we go. That's basically what we're gonna be looking at cap. Coming back to what we were talking about, right? How to identify the range, or sorry, to identify the whether we're bullish or bearish, the trend. Well, then that's why we have indicators, right? So basically, everybody loves chunky candles, right? So yeah, this is the chunky version of Frankie candles. Just kidding, my friend. I don't know you, but I've been told that you're pretty cool. This is not an attack, by the way. Just kind of like it looks funny. Here's funny from my side. So chunky candles, there we go. We got them right here. And of course that we cannot go farther back in here. So we want something that is give us the trend right away. So for that, SMA, let's just turn them on. Look at that. If I just slightly turn around, look at that. I'm coming from a downtrend breakout, right? And then back and forth, back and forth. I already have break, 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 right? 1, 2, 3. So I know I am what? Ranging, right? Based on just my SMAs. If I turn on my dynamic reactor, well, I see I just break bullish, right? It's not about the breakout, it's about your retest. We want to find that support. What is that support? On the dynamic reactor for intra-trading zones, right? Or inner structure, or if we turn on or measure our support and resistances, what do I have here? Support, 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 resistance. So I can easily create a line, which actually it is part of the bottom of our inner range, right? Easy peasy, lemon squeezy, right? What's gonna be our first entry for long? Right there. So let's see what else do we have in here. All right, let's use one of my other indicators in here. This is gonna be my, let me show you here, my trendy or trend mode. Depending on what version you're using of Market Oracle, this is the plus version. If you're using only the pro version, this might be just say trend mode. All right. So just so you know, I like 43. Let's take a look at clean this up and see how that works. Let me remove everything here. Perfect. All right. Now I am going to be turning off my dynamic reactor. There we go. And then also I'm going to be turning off my candle highlights. All right. What I want to see, first of all, it is that I can easily identify my market structure, right? Uptrend, range, downtrend, whatever. All right. Then the next thing I want to do is add my dynamic reactor. And then see that my dynamic reactor matches what I'm seeing here, right? Let's just give it a second. There it is. Dynamic reactor matching the trends that I have, right? Again, if you don't have dynamic reactor, don't worry. Use your SMA setup. Does it matches? Yes, it does. Nice. All right. What's up next? Well, then up next, I want a redundancy. What would that redundancy be? Well, in this case, I'm going to be using my trendy. Let's get started here with something like 20, right? Let me just turn it on. Give it a little second. And you'll see that this goes crazy. We'll see. There we go. All right. So there's two ways to use this. I'm going to be showing you mine, but also I'm going to be explaining you what would the benefits of using a lower setting would that be, right? For me, remember, this is the trendy. Trendy refers to a trend, right? So if I already know where the trend starts for me, right? Look at that. This one, it's a banger. Perfect. This one is also a banger, right? Why? It's not that it's right at the beginning of the trend, but it is at where the trend breakout it's happening. That's exactly what I want. All right. So there we go. This one does mark one of the trends that I'm looking at. In this case, ranging, no trend, but still look at that, catching the inner trend, up and down, up and down, up and down, up, right? Catching the beginning of that trend and then going all the way down here till we start seeing the range, and then up and down, up and down. This configuration looks fantastic, right? It does look fantastic. Hey, Alex, our crypto in the house. What is up to the best teacher, trading master, Alex O Crypto. What's up, brother? Great to have you here. Great to have you around. Thank you for joining the class. Good evening, sexy man. Good evening, master trader. What's up, my friend? By the way, epic live stream today from Alex O Crypto. Guys, if you want to win, just follow this guy. It is freaking amazing. He streams, I would say, I'm not 100% sure. Alex, do you have the time on EST timing on your morning show? That'll be amazing. Hey, Army Piper, what's up, brother? By the way, the magic Army Piper who called the bounce today in the morning since Friday. Hey, man, that was amazing. What a hit. Hole in one. Oh, man, we are full of epic legends here in the show. Thank you guys for joining. Shout out to you, man. Thank you so much. Jay Violet, what's up? So let's take a look at what else do we have in here, right? As you can see, and this is an amazing indicator, right? Not only indicator, it's an amazing configuration, right? But also, this might not be working the way that I intended to work. It actually is. It is catching the range right before my brain catches it. Why? Because for me, right, let's call it like that, right? Let's see the range. Maybe the range is in here. My range starts in here. So for me, I could be considering this as interference. Well, that depends on what you're using your trending for. If you want to trade the inner structure, let's go back and zoom in the chunky candles. Oh man, I wish he would be here and he says, hey, chunky OC or something. That'll be funny. AF. All right. So you can see that you could be trading, you know, like the chunky candles with this indicator. Nice. Look at that. And also using the same strategy, guys, right? Trend line, breakout, retest your entry, off we go, right? What happens here? Trend line, breakout, retest, and off we go with your confirmation indicator right there. So that is the benefit of using a lower setting on your trendy setup here. All right. By the way, guys, if I know you just came in, Piper and Alex, but I was showing the rest of the alumni here that they can use the SMAs as a dynamic reactor. Quick tip right there, man. So look at that. My settings, just for a little recap, 110 smoothing SMA of 20, and that gives me the thickness very close to the thickness of the dynamic reactor, and also a very nice trend compensation right there, trend calculation. All right, moving forward. Now that we have the inner trend, right? Well, I usually want not the inner trend, but the major trend. Why? Why do I use it there if this looks much cooler? Well, for once, I don't want to get that many flags, right? It adds for me to my OCD. Man, it stresses me out, right? So for me, it's much cleaner to have just one, knowing the trend, right? If I know the trend, I know every pullback, it's an entry for me. Every pullback, it's an entry for me, right? Until I have breakout retest, entry for me. You see that? Guys, remember what I just said. Remember what I just said. We'll visit that tomorrow once we run profits. All right. Now that we have that, let's go for my setup. By the way, something important is for you to configure it the way you like it on your best time frame. I love the 3 minutes recently, more now that I've been trading along with Alex O Crypto. but I'm still much more profitable on the 4 hours. So when we're talking trading, we're not talking gambling, right? We're not talking fun or pure fun, right? I mean, this is fun, should be fun, right? But we're not only for the fun. We're here for the numbers, right? And also to achieve maybe either an extra income, financial independence, right? Or whatever that helps and makes our capital grow, right? So we are not here to waste money. So that's why we're going to be configuring in where we are the most profitable. Hey, Trade Intuition in the house. What is up? I can pitch like a boss, or what do you mean, man? Oh, dude. I'm just watching. I'm not following that, dude. Twerk. Oh, I see. Twerk a mole. I no idea what's that. All right, let's continue with that. Oh man, that is just funny. So for me, let's go here and you'll see that it has a little bit more interference. Like, what is this? 2 shorts in the same time? I mean, what can I do with this? Yeah, can I trade it? Of course. Would it be profitable? Yes, right? This one will also be profitable, but now it's falling out of phase, right? It's falling out of synchrony. It's falling out of what my brain perceives as harmony, right? And that's what we want. We want the indicator to harmonize with what we got, right? So let's go here. You'll see that 20 for me here might not be the best, the best setting at this point. My suggestion, it is to go in 10 increments. Let's go to 30, click away. Let's wait for that little eye to start moving. And we'll see that the bigger the number, the bigger the trend we're going to be trying to measure. All right. The more flags we got, of course, the shorter the trend. The less flags we got, yes, the less interference, and also the bigger of a trend, right? So look at that. Just right now, we just took out one of those flags so far, right, that we measured. So this looks much cleaner. Let me go back once again. There we go. Let's do this to 20. Just go back to where we had it, or what we had it. You see how many flags there are? Let's go back to 30. Click away. Let's see how less flags we got. You see that? So let's go maybe a little bit more. 40. Click away. Guys, bear in mind, and I want you guys to notice that I have my dynamic reactor turned on. Why? My dynamic reactor right now, it's going to be my base indicator, right? This is going to be my foundation indicator. What's going to hold everything else. What does that mean? That means that my dynamic reactor is determining, right, when my trend changed and when, right, I should also change out of mentality, right? Look at that. You see that? Perfect. Now that we know that my dynamic reactor is leading the pace, is counting the pace, is singing the lyrics, right? It's drumming the bass. We remember that you can do the same thing with your SMAs, all right? Now, I want to pair as closely as I can my trendy. Why? Because I want to have a backup, right? I want to have an extra indicator that tells me the same thing, right? I want to have redundancy. This is what I want, right? Redundancy. All right. Hey, username, what's up, buddy? Welcome to the classes. Great to have you here, my friend. Rip chat. Nice. Love it, brother. All right, so as you can see right now, look at that. Trendy 40 breaks almost exactly at my dynamic reactor, right? Breaks almost exactly at my dynamic reactor. Oh, look at that. A little bit of interference, right? Can I change that? Maybe 41, 42, 43. That's what I came up with, 43. 43 is not for this interference, but for the overall interference that I had throughout my charts. So as you can see, this is a very nice configuration. Guys, this is another thing that I like to have on my charts. Additional features, candle highlights. If I change it to trend static and I turn it on, look at the colors of my candles. There we go. Look at that. Look at how they change. They pop, right? That way I can easily identify them. Easy peasy, lemon squeezy with a single sight, right? With a single look. Nice. All right. So Now I know that for 4 hours, right, I can change my setting to 43, which is going to be giving me redundancy on my dynamic reactor. Now let's go for something. Let's go for TAO. Let's zoom in. That way I could not, or I should not be wasting time, right? Looking for what? The structure. I already know it. I am bearish. I'm below dynamic reactor and I'm red. Bearish. You see that? Let's go to something else. I don't know. Let's do what? Guys, give me a setup. Give me a something here. I'm reading you guys. Let me know. Dogecoin. Bullish or bearish? I don't care. I already have my setups in here. Absolutely, the username. Let's do it. Let's organize another setup there. Another gaming tournament. So bearish, possibly entering for a possible range. Why? How do I know that? Look at that first breakout as a fake out, but I have not lost the previous meaningful lows. Well, technically I have, right? Technically I have. But I'm bouncing from it, so that gives me the hint that I could very much break back. And what happens when I break back and forth, back and forth, back and forth? I know I'm ranging. You see that? So I'm saving myself like a couple of seconds, right? Yeah, I know, a couple of seconds might not look that much or that bad, but that is giving me a lot to work with. So I can go into anything here, into something very quick. Give me 1 second. Sorry, just getting bombarded with discords here. So as you can see, there we go. It's saving me a couple of seconds, but when we're trading, right? And something like, I don't know, maybe there's a call, right? Maybe Piper said, you know what? We're going to be looking at, I don't know, link, right? So I can go to link and then just wait a couple of seconds for it to load and boom, bearish, right? Oh, I'm bearish. What am I looking for? It's not about the breakout. It's about the retest or the range, because I have a range coming down, V-shaped recovery. Oh, look at that. I'm going to be waiting for my dynamic red to come in strong and bounce from it for a short, right? I already know just by looking at this, 3 different things that I can do, right? Today we talked about the what was it, the Oompa Loompa loop? I don't remember the name, man. Oh, sorry, guys, go watch the Piper Academy today morning. It wasn't the Oompa Loompa loop. It was the Hubo loop or something like that. So the point of the name or whatever it was, man, Piper is gonna kill me. It is that there is a set of steps that you need to do, right? It is always faster acting than reacting, right? So what are we talking about here? So what if he was saying, what if I throw a ball to OC, right? I would then have to react to that ball being thrown to me, right? I need to first allocate myself in a position, right? So, take a look at my surrounding, see the thread or the incoming, position myself, and then act or react to it, depending how fast that happens, right? What if I first, and I'm constantly doing this, which is what Piper was suggesting, right? Know your environment. So I see Piper maybe coming in to my left, right? He's right there. He has a ball in his hand, so I'm acknowledging. So then I turn around and face him. Now when he puts his hand up and the ball, right? I am expecting an action. So I'm going to be acting, not reacting. I'm going to be acting when he throws it. I'm going to be acting because I already know what to do, right? Put my hands up, catch the ball, and maybe throw it back, right? Or maybe do a little bit of a, I don't know, a trick, and then whatever, right? So the point in here, it is, look at that, having those indicators get you to know what position the market is at this point, right? And based on the position, you already have some strategies set on places, right? What strategy do we have on places? Well, if we're bearish, first, if we're bearish, we're favoring shorts. What is the setup for a short? Every pullback, it's an entry, right? Pullback to where? To your big volume zone. Where is your big volume zone? At your dynamic reactor, or if you don't have your dynamic reactor, at your SMA setup. You see that? So I'm gonna be expecting a pull-up somewhere around here, or I'm gonna be waiting for a range. Because ranging, it's another way of correcting. Setup number 2, ranging. Remember, we even have a whole full class on how to range trade. And remember what I showed you guys? The Wyckoff setup. This is not me telling you. Oh, sorry for blind you. This is a well-known pattern, right? Coming down, little range, V-shaped recovery equals 70% chances of ranging. Define your inner range, define your outer range, hedge it, and be happy with your gains, right? Laugh all the way to the bank. So, coming down, I see I'm below what determines to be what? Determines to be the trend. So I could be doing two things. One, acknowledging I'm coming down, I have the range, the V-shaped recovery range, right? Bearish range because I'm below the EMAs. So what do? Try to hedge the range. And then short, maybe at a different position, short at the resistance. You see? Now I have different setups that I will be willing to act as I see the ball or the price action coming to me, as I see the price action doing or confirming a structure, right? When it confirms a structure, I know that I have several setups to play along, all right? So guys, once again, go check out the Oompa Loompa Loop. That's not the name, but that is on the Piper Academy show today in the morning, right? So watch the replay, look for the loop thing, and then just give it a little note, right? Or something like that. Just learn what are the setup places, right? It's just see things coming, prepare yourself, position yourself, and act. Do not react, right? So that is basically for what we got right now. Let's move into something else. We are almost out of time, so let me move faster with the indicators, right? So another indicators that I use are support and resistances, right? There we go. We talked about the support resistances, how I have set them up. Just so you know, let's go here. And I'm using Market Dynamics Pro. And I'm using my support and resistances on local up to 5 lines. And I want to add proximity, right? Let me give you a rundown on those. Very quick. Proximity measures from the place that I am right now. And it's going to be printing the 5 more important support and resistances starting from where I am right now, right? If I click out or turn off proximity, maybe my support and resistances are not going to be there and are going to be here, 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 here. 1, 2, 3, 4, and maybe there. 5. The 5 more important resistances. But at this point, I'm also interested to have something below, right? So that's why I'm telling software, well, not just give me the 5 most important support and resistances, also take into consideration where the price is right now. So that's what it's doing, right? So it's giving me the previous low, giving me that support, the next meaningful resistance, and so on and so forth, right? Then I'm going to be adding another Market Dynamics Pro here. And I'm going to be using the same thing here. There we go, support and resistances. And I'm going to be changing the settings, the color settings here, right? And the most important part in here is I'm going to be using a multi-time frame. 12 hours, fixed 12 hours. Okay. And I'm not going to be using proximity. Why? Because at this point, I know 12 hours could be very far away if I'm in the 5 minutes or the 12 minutes, right? And I don't care that they played from where the play, or sorry, they don't plot from where my price action is at. I just want the most important regardless their position. Why is that? That is because I want to use them as almost absolute, right, support and resistances. Let me turn them on. Okay, here. And you'll see, right, that I have very strong support and resistances, regardless where the price is at. It just so happened that I'm in one right now, right? So now that I turn them both on, right, there's two things that I'm looking for. One, the dashed one, the most important. Two, concentration of support and resistances. Double lines. Look at this double line. This is not only 4 hours, but this is also 12 hours resistance, right? And the third one, channels. This is a little difficult to understand. For example, this is a channel. Yeah, I know this is another channel, but the actual channels that I'm looking for are this kind of channels, right? And I'm telling you, this is a little bit difficult because we could also call for this channel, right? But I will say that this is just pushing it a little bit too far. Why? Because this one, these three lines are very close to each other. That, yeah, they're not duplicating, but look at that. They're making for a bouncing channel, right? Like it happened here. You see that? That's the next thing I want to do right there. All right, so let me just clear this up, right? And we already have, there we go, support and resistances. Guys, here goes one of my tricks in here. Layering, keeping your charts safe. Look at that, clean, sorry, not safe, clean. I have market oracle, then I have market dynamics, then I'm duplicating market dynamics. Why? Because I want to have full control of what kind of support and resistances I have, right? Now, let's go and take a look at a couple of other indicators. One of my favorite indicators, it's a free indicator. Let's go right here. And this is the, where is it? Come on. Oh, I can find it. Let me see, maybe I just uncheck them. I got it right here, don't worry. Let me save this. I actually use them while trading. Gauss trend crossing by chart prime. Let's go to this Bitcoin right here. This one here. This, guys, it's a setup. What Alex of Crypto teaches as liquidity buildup. All right, let me show you. I teach it some other way, but just so you have a relationship of the teachers, right, of the influencers that we kind of like collaborate together. So when you say parabolic, yeah, one of my favorite words, parabola, parabolic growth, that builds liquidity, right? Parabolic growth creates liquidity. All right, if I can do a parabola measurement, let me show you. If I have X and Y, right, a circle or a parabola, let's go for a parabola, it's just one growing much faster than the other one. All right. So wherever that parabolic growth, right, is going to be also leaving a lot of liquidity to be taken. Why? Because of trade allocation. All right. So just when you see a parabolic, parabola, whatever, it's just telling you that one is growing faster than the other one. So we are not at all ranging, and we are not making an actual range, or sorry, a trend. Why? Because usually a trend, it is somewhere between a 45-degree angle. Let's just leave it as 45-degree angle growth, right? Something that goes up, goes down, goes up, goes down, goes up, goes down, right? But a parabola, that's what it calls a parabolic movement, starts slow and then shoots up. You see? All right, whatever, too much math. Let's not jump in that. Whatever. Just know that parabolic growth gives you a lot of liquidity to be grabbed. All right? That's it. Point, period. Shut up, OC, and go to and let me know how I can make money at it. All right. Gauss trend crossing. Look at that. Measures parabolas. Measure parabolic movement both ways. Parabolic movement, parabolic movement, parabolic movement, parabolic movements, right? Based on that parabolic movements, gives you a tangent. What is a tangent? Man, me and my math. All right, whatever. Parabolic, a tangent is whatever line it crosses and touches part of the parabola or part of a circle, right? Usually to define this tangent, right, that can be drawn in many different ways, you take into consideration where that volume kicked in to make that parabolic movement, right? Like, for example, we have XY. We could have a parabola like this, right? Or we have a parabola like that. Where does the influx came in? And that's where I'm going to be calculating for a tangent. All right? Why is it important? It's important because it is measuring, or it's giving you an auto trend line on the volumetric push through, where the rocket fuel came in. So we don't really need this where it was passive trading. We're looking how far or how where the strength came in, right? That's where we calculate the parabola, or sorry, the tangent on the parabola. Why is that? Because if we break that base trend line, we are breaking something like an average. Average of what? Average of the power, where the power was, or the influx of volume was injected, right? So therefore, breakthrough, retest, off we go, right? This is a great tool to add to your trading zone. So let's add it. Ghost trend crossing. Let's go back to our main setup here. There we go. Oh, it was set up here. All right, click it. And I usually leave it as default, all right? Also, if you want to configure this one, don't worry, I'll show you very quick how to do so. Let's go to this one here. Let me double click. And this one is measuring inner structure, right? Just so you know. But if you want outer structure, feel free to both change how you calculate. I usually go for wicks because I also want to factor in volatility. And pivot forward, this only will change how to calculate the trend line in here, right? So the max zigzag will be how far the trend will be calculated, all right? So that's the only thing that I'm going to be trading. For example, right here, we have a ghost trend. line. We're breaking it, breakthrough, retest, confirmation with what? With your oscillator. What do you have in your oscillator? Do we have flip of the ribbon? Yes, but really far back in here. What could we be looking for? Breakthrough. If you don't have that oscillator, don't worry. Let's use this oscillator here. What we want to see? We want to see increase of strength and what? On a bullish, right? A bullish trend right there. So once we have a bullish trend and a change of power or change of strength, that's when we're going to be jumping into for that trade. There we go. That's another tool that I really like. Let's go and do the last one here. And that's going to be predictive algorithmic trading. So guys, there's two kinds of indicators, right? Overall, in chart prime, we divide them in predictive and reactive, all right? What does a reactive indicator is? A reactive indicator, it is something that knows where it's reacting from, right? So basically, look at that. High, low, 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 low. Based on those, I can create a support resistance line, right? So I'm using this data to have an I don't care how it reacts. I don't care how it reacts, but most likely it will react, right? Indicator or line. This is a reactive indicator, right? So it's not using current data. It's using past data, right? To show you where past reactions had happened and future reactions may also happen. You see how that goes? All right. A predictive indicator, in contrast, yes, it would also be using past data. And let me show you one of those. Those are reversals on chart. Yep. Let me turn off trendy. Let's click OK. And now instead of trend signals, we're going to have reversal signals. Give it a second here. There we go. Reversals. You see that? What's happening with these reversals? By the way, these reversals, look at that, oh, guys, at the tippy top, at the bottom, tippy top, bottom, right? Those are not trend shifting reversals. Those are immediate reversal setups, right? There's three ways of reversals that we can look for. We'll see that in a future segment because we're running out of time. But at this point, what I want you to note, it is that it's using mathematical pivot point calculations, right? Among many other things, right? And then grabbing that data and producing new data. What is it about this? So just like, for example, lottery tickets, you grab all of the historical data from those historical tickets, right? And what you use, what kind of math you would use to predict the future? Any guesses? No? So we'll use predictive math, right? I mean, I know the name tells it all, right? So we're going to be using predictive math to see what is most likely based on previous zones, right? Not only to project them, right? But to have an actual calculation of a pivot played out. So in this case, we're telling, hey, grab the data, just like AI, right? Just a disclaimer, this is not AI, but this is just like you would do with AI, right? Analyze everything and then give me, based on math, right? Where is the best chance of a reversal to happen? So it's going to be telling you, hey, all right, so I don't know, the AI is going to be going, oh, look at that. It was because of volume, because of price action, and because of a pivot, right? Also because we have a trend line. All right, so next time that I see the same setup in here, right? The next setup, which we don't have, next time that I have the same setup, I'm going to be giving you a reversal based on the setup that worked. You see that? So it's predicting based on what it learned. When the next setup happens, it's going to inform you, hey, look at that. This is a reversal setup. So I'm going to be giving you a reversal. Do you see that? So it's not just telling you, hey, yeah, this happened in the past. Most likely it was going to happen in the future, right? No, it's telling you, hey, I learned this, and next time that happens, I'm gonna show it to you, right? So that's absolutely great, guys. There's a caveat here, right? And we need to also understand reactive indicators that, as I told you, hey, because it happened in the past, most likely it's going to happen in the future, right? That is a reactive. Reactive, they are based on for sure zones that happen in the past. Because they happen in the past, they're for sure. That happen in the future, that's not for sure, but it has a high probability that repeats, right? That means we can define with almost absolute percentages, which is 30%, right? 20% with absolute 0.0000000, if that makes sense, possibilities of it to play it out. While when we're using statistics, right, which is the kind of math, if you don't know, by the way, statistics and probabilities, right, is a kind of math, of predicting things. So how do you calculate something with statistics? You usually have, yes, a percentage, but it's usually variable, right? Or it has a slag, right? Between minus plus this number, right? Minus plus between here, or between here and there, right? So based on that, that's what reactive will give you. Sorry, predictive will give you. Another important one, and let's add it together right now, it is market dynamics, bro. Again, I know I already have it in here, and this is going to be the last one. So market dynamics, let's go and add it. Nope, my bad. It's all the way down here. Let's just move it up. Oh, I forgot. I need to go here to my right, click it, and then move it up, right? Click this gear icon. I'm going to be turning off almost everything but my POC. This is another thing that I'm going to be looking and using. And also turning on. Where are you? Don't hide. Here it is. Where is it? Predictive ranges. Predictive, right? Predictive ranges. I don't want it to be filled. I'm gonna be leaving them as they are. Click OK, and this is gonna be giving me what? Predictive channels, predictive support and resistances. The difference, let me explain once again. The difference between a reactive zone is that based on past data, right, we have a for sure line that points around 91,537, all right? But when we have predictive math, well, we have, hey, most likely we're going to be looking at the golden line for the strongest zone. Both golden lines, you see that? And look at how they're pairing, both my predictive and my reactive. And that's exactly what I want. I want a piece of software that tells me, you know what? I'm going to be using possibilities, right? And giving you what is the best possibility, the best greater chance of playing something out. And also I want another piece of software that tells me, hey, based on the past, this is the most probable zone, right? And where they're pairing, look at that. That calls confluence. Again, look at where's my dynamic vector coming in, my money flow POC, and two lines. So this is a big both support and resistance zone. You see that? All right, let's wrap it up for today. We went a little bit over time. Tomorrow we're going to have chapter 4.1, which is going to be free indicators. I'm going to be giving you my best free indicator setups, and also we're going to be layering indicators out. So tomorrow we're going to wrap it up on see how to get as many indicators as we can without cluttering our charts and layer them out in something that makes sense, something that you can read, use on your favor, right? And have full control of it instead of having just a whole mess of things that you cannot read, right? I mean, who in the world could read this? I know of one guy can does it, but I think most of us get overloaded with this, right? So that's why we are using different layers so far to have full control of what we got. And also I'm going to be giving you my insights on how do I decide what to turn on at the same time. One of those, which is going to be the last thing I talk about today, it is predictive, right? And reactive indicators. Why? Again, because I want the power of a prediction, of mathematical predictions, and also I want the power of for sure data in the past, right? So in that place, that's how I can define areas of bouncing. So that's the first theme and introduction for tomorrow chapter. Tomorrow chapter 4.1, indicators, but it's gonna be better towards to free indicators. Other than that, guys, thank you so much for joining today. Really appreciate you guys being here. Hopefully you guys are learning something. Also, if you want to learn something in specifics, hit me up on the Piper Academy Discord at OC and let me know what you would like me to teach, right? Other than that, guys, thank you so much for joining. And as always, see you guys tomorrow.